Okay, you do hear me. Alrighty. Wasn't sure about that because normally it looks a bit different, the visual. And you see my screen? Good morning, Layman. You see my screen as well? Visual also fine. All right, cool. Let me just check with the person, Natalia, to check why I don't have a start broadcast, because normally I click on start broadcast and then we start, so I'm a bit confused. She doesn't have it either. Well, I don't know. I guess we'll just start. A bit different than normal, but just a technical thing, that's why. Alrighty. So does anyone else hear me except Lehman? Just to check. Not that I think that would be that spooky, but yeah, good. Alessandro is also confirming. All right, perfect. Then let's get started. Let me maximize this. Alrighty. Good morning, everyone. Welcome to our live trading and analysis room offered by Admiral Markets and myself. So glad that everyone could join today on Thursday, June 6, 2013 for this London session open. As usual, as you're aware, please be cautious. We're going to take a look at this risk disclaimer. Please read through the entire thing, but I'll give you the highlights. Trading, foreign exchange, and financial markets is high risk and considered risky. Please be aware of that and seek the advice of an independent financial advisor. And also be aware that this video and webinar is for educational purposes only. All right. So thank you so much for your attention on that. Oh, wait, I do see a start recording button all of a sudden. It's very small now. It's like very, very tiny. It used to be like huge red and you couldn't miss it, and now I see it, but it's like ultra mini scope. So sorry, I would just quickly hit that start recording button. So welcome to today's session of our live trading room and analysis room at Admiral Markets and myself, Chris Svorcik. So glad that you could join us on Thursday, June the 6th, 2013 for our London session. As always, we're going to take a quick look at the risk disclaimer statement, which says that trading Forex and global financial markets is high risk. Please be aware of that and seek the advice of independent financial advisor for more information on that. This video and recording or webinar is for educational purposes only. So please take a look at that disclaimer, and I thank you for your attention on that. All right. Thank you too for your understanding that I had to say it twice because I couldn't find that recording button. So welcome to the live trading room. Once again, Tuesdays, Wednesdays, Thursdays at the London Open. All right, we're going to take a look at my own account that I have here for this trading session only. And we'll be looking at the London Open trade. We'll be looking at breakout trades, which are the next two, the BO, the BPC, and the BPC. And pin bar trade, because I think that's, once it happens, I'll give you, show you how I trade it. But those are quite straightforward, so I added that, and maybe a fib trade or two, but especially breakout trades I think will be our main focus. And yeah, we're going to try to focus and capture, especially intraday and swing, but who knows, maybe we'll have also a position trade strategy, so if we bump into it, I'll definitely let you know. Not sure if anyone is really interested in position trading, but so this is the definition of breakouts, and here you can see the chart nicely. It's basically the rhythm of the market, right? Impulse, correction, impulse, correction, impulse. So breakout trade is great because then you catch it when it starts to go instead of waiting in this mess, right? With those black boxes. Make sure to take a look at Admiral Markets in the social media. And here are some great links regarding trading you can use for your own benefit. All right, let's take a look at those actually right now. Now today is a bit tricky day, to be honest, because we have the euro and pound interest rates, and we also have pound, how do you call it, the assets, what was it? I forgot the name exactly. Well, you know what I mean. So to be honest, I usually only take, if anything, I only take a swing, like a position trade that I find very, let's say the currency is really like at a bouncing spot or a major turning spot, then I would take that trade with a wide stop loss. But with intraday trading, I hardly trade today because of those NFPs, interest rates. Personally, I skip it because the reason is because the resistance and support levels, and by coincidence we'll have a webinar on resistance and supports, are not as tight or not as defended or not as important as any usual trading day, which is more based on technicals than news announcements kind of sending it back and forth with a lot of volatility. So maybe you could use the NFP strategy that Tarantula and I were talking about in a webinar called NFP strategies, I think, or NFP. You know, that's a different type of trading. Now the interest rates are still 4 hours from now, so let's take a look. But to be honest, if I wouldn't be looking with you, I wouldn't even look at it, to be honest. But I'll definitely take a look because I don't want to disappoint you. Let's take a look and see if there's anything interesting. But be aware of that at least, okay? That we have that interest rate announcement, because especially if we get closer to that announcement, you know, it will get, usually the market dies down, and then once the announcement is released, you get some volatility. Personally, I don't expect the rates to change, but it still could have an effect, especially if you have, oh, thank you, asset purchase facility. Thank you, Steve. That's it. Thank you so much. You know, especially I lost my train of thought. Anyhow, you'll have a big movement. You get the point. Let's move on to the chart here. And our usual trade is the London Open, right? So we still have 7 minutes. Let's take a look. Let me move my vertical lines here sideways. And well, I don't know if we don't have to look at it because, to be honest, we again had a pre-London break, just like yesterday. Quite strong break, actually. Remember yesterday we had here, let's see, where was it? That was this, yeah. That was this move up, pre-London, right? Then we got that drop, and we were considering a buy here, but I took it on the euro and not on the pound, remember? So the euro eventually did move down. I was already afraid of that. Well, I wanted to see it. Well, let's talk about the euro later on. Anyhow, the pound did bounce, right? And we got a three-wave up here. Then we got a bigger hook back and a push later in New York. And this was Asian. And we got a continuation already pre-London. So, yeah, that would have been a good break again for our London trade. It happened again before our starting moment, which is a pity. But what can you do? So that one again isn't going to play out. So I hope next week finally we'll catch one of this setup. That would be cool. Just that for those of you who are new maybe here, the London Open is looking at the price action 3 hours prior to London and 1 hour prior to London, putting those vertical lines there, then taking the high and the low of those 2 hours, and we want a break of either the high or low, but it has to be in the same direction as the EMA, and price has to be above that 89 EMA. So you have 89 EMA pointed in a direction, price above it if the EMA is up, price below it if the EMA is down, and then we're looking for a break below the low for down move in a downtrend or a break above the high in an uptrend, all right? Okay, so let's take a look at the euro of this pound quickly. Now the upside, definitely not surprising me. all right, as we expected yesterday. We already had this break, right, of this trend line here, and we're just, keep pushing to the upside. So that definitely makes sense. The question is, let me get rid of this. How far can we push? And I don't think much, to be honest. I don't know if anyone is in the long, in the pound, but I would be very careful of the 786. First of all, it's a 786. And second of all, we respected the 236 right in here. We respected the 382 right in here. We respected, no, not the 50 actually. We paused here, but nothing special. We did stop right at the 618. So 786 or 886, one of those two, I would say is a high probability that we stop there. So that's not much space. So if you're in the long, be careful of those levels. All right, I just wanted to warn you, because this is a pretty impulsive move up, but eventually we are going to retest. We're retesting this top pretty soon, and a bigger retrace down maybe before we break it is going to happen. Or if we don't break the top, something like this, and then down will happen. All right, so this is anyhow a resistance zone. It doesn't really matter if the long term is up or the long term is down. It's irrelevant because it's a resistance zone, and price will react to it and give some retrace to the downside, and then probably some bounce up to the upside. And then it's the question if we continue up or continue down. All right. Let's see. Let's zoom back. Let me just day chart, by the way, just quickly. Very bullish candlestick formations. Right, just continuation, so that's very bullish. And you can use this trend line even actually to gauge whether the upside is still intact, or we could have maybe a break of that line would indicate temporary uptrend in the freezer. All right. Let me clean up the chart a bit. Alrighty. Let me see if there are any fib targets that are important. You see here the 1,000 target as well with the 786. We're going through the 272 already. What else? Let's zoom in again, I guess. No, I took this 1 second. I just put this fib. I want to only have it on the 4-hour chart. 1 second. Alrighty, let's zoom in to the 50-minute world now. Alrighty. Well, to me, any dip down would show a good reason to buy it, unless we hit the 786. So again, let me just put where's the 786? 154.60, and we're at 154.42. So any dip back to these moving averages, we can do the same as yesterday basically, which was this one, right? When we get on a 5-minute world back to the zero line, back to these moving averages, that would be a good bounce, to be honest, as long as we don't hit the 154.60, or I would say 154.55, because I don't want to be that precise. 154, if we're 5 to 10 pips to the 786, you still want to be careful, because sometimes a fib gets missed by a few pips. It's definitely, you definitely see it. All right, so upside looks good, but once again, if we hit that 786 fib, then the whole idea I'm throwing through the window, basically, because then the whole market could change. In my opinion, we could see, a pretty decent retracement from that level, and I don't want to start buying it right when the whole structure of the market is about to change. And the 786 definitely has that ability. Now, if this were to happen, we hit the 786 and we go back to the 4-hour chart. we hit the 786, we make a correction, and then we break through the top and the 786 and then hook back, that's still a good buy, of course. I'm not saying that that isn't a good buy right in here for a move up to the 886. No problem. But what I'm talking about is that if it hits the 786, then makes a retracement. A buy maybe here still makes sense, but you have to be careful that this thing could drop lower, first of all, and that if you get a bounce, it could only be a hook back and then again down. So, that's not, I would say, the best buy I can imagine, personally. Now, it would be different if we, as I said, if we make this up, then down, then do this, right? Then the structure has changed. So let's see. We are very close to that 786, which is a pity, because it's almost like the market is eating up all our space up to that target before we even started the session. But still, let's see what we hit, 154.43. It's okay still, I think. If we make a dip down, that would still be I would still think it's fine for long. Let's keep an eye on this, just like we did here. We didn't take the pound, but that would be the idea. See the moving averages nicely tearing apart from each other, price above it. So normally if price would move back here, it should be some bouncing board. So let's keep an eye on this pound. All right. Any questions? In general, I would definitely support anyone who says I'm just trading demo, because I think interest rates are always funky, to be honest, in my experience. But that's up to you. That's always your choice, of course. Any questions on the pound? I don't think so, huh? Doesn't look so. Alrighty, I guess that's clear. That's good. Happy about that. You can see also the 1 hour chart moving averages beautifully moved up. I mean, it's not something that you necessarily have to trade, but it does give a very nice visual of that uptrend, doesn't it, on the 1 hour chart? Week chart, very bullish. You see that? Wow. Alrighty. Well, let's move on then to the euro. We take a look at the pound on this chart just quickly. Very bullish 1 hour candle. You see that? Big. This is a very bullish break. I mean, we have definitely a resistance in here, and yeah, I mean that's a massive break, pretty strong break. So who knows? Maybe we'll just push through the 786. But I wouldn't speculate on it because price action on a 1 hour chart doesn't really match, usually speaking, a 4 hour or a day chart fit. Normally it loses because it's just, the other one is just more powerful. It's like, the small guy fighting against the giant, kind of. So although the 1 hour chart looks impressive, I would think that the pound stops its impressiveness at 154.60, but let's see. In any case, a nice break. So if it dips down, that would, this 1 hour candle would be kind of retraced, right? If it dips down here, we kind of get a retracement of that 1 hour candle, which should see support. All right, let's go to the euro. So the euro didn't get that bounce. Well, later on, after a lot of ups and downs, but not when I was looking at it, or we were looking at it. Let me quickly get rid of this. Oh, okay. The pound did, the euro didn't, unfortunately. Let's see. So we're were we? This is the one out. This is the 50-minute chart. Yeah. Let's see. We were looking at it here. We didn't get the bounce here. It dipped a bit low, and then, as I said, anything in here, back to this bottom, back to the 55, back to the 382 is definitely support, and that's what happened here. We had a huge spike up and down, quite choppy, even yesterday. I expected choppiness on Tuesday, right? Well, Wednesday was the same. So the whole consolidation got widened out even further, and we got a bounce here again during Asian session, and now we're finally breaking above this top with also a pretty strong candle, just like the pound dollar. So this too is pretty close to resistance. And if you put a fib on this move down, you will see also here 50 bounce, 618 bounce, 786 bounce. So the next one would be logically, most likely, the 886, which is exactly at 131.48 where the target is. So here too, the space is kind of limited to another few pips to the upside. Not much space, but here too, if you get maybe a small dip down, that is possible here too. Let's take a look at the 15 now. Alrighty, let me take a look at the other chart now on this one. And you can see here, this was a dip against the moving averages, and we got a nice rebound from that. All right, that's kind of what we were looking for yesterday as well, but the rebound wasn't that impulsive enough here, unfortunately. So same story basically as the pound. They're in that regard quite identical in their setup. Although the pound is showing a bit more strength, isn't it? Because the pound broke yesterday. It's moving up and up and up. So there is a bit more strength there in the euro, to be honest. And that's reflected in the euro pound moving down, right? Okay, so let's keep an eye on it as well. I'll put this to 5 minutes too. Alrighty. So that's about it for the euro pound. I don't have anything to add on the euro actually, because of the fact that, to me, I think everything is clear unless you want to ask a question. It's just we're in uptrend. We're getting very close to resistance. You can see these tops also right in here, plus 886. So that should be a huge level, which is not broken. We should see at least retrace back to here somewhere, at least that, then probably a bounce up again. All right, so that seems very likely. So that's about it. I can be very short about it, I guess. And day chart question on the day, in case you're interested in long-term analysis, is will we break basically eventually this bottom for a down trade back to this bottom, or are we going to break above these tops for a trade back to this top and maybe a break up to 140? All right, so that would be very interesting. That's the long-term perspective. All right. For Steve, let's take a look at, I think Vitatus, yesterday you said call me Steve, right? I'm just checking because I'm not 100% sure, but I thought so. Was true, right, or not? Or was it someone else? Let me know. Maybe it was someone else. No, it was someone else. I can manage. I hope. Maybe not. I don't know. Let's see. What was I talking about? No, sorry. You asked about divergence on 4-hour time frame. I like the oscillator better. This oscillator. On the MACD, it's just moving up, isn't it? Keeps moving up here. Well, on the oscillator, we would have to compare it to this top or these tops. Well, this one is still higher, but that's also logical because this is still a higher high. So that's quite normal. If we compare it to this top, we have actually higher high in price and a higher high in oscillator. So that's fine. Now, I think you're talking about these two tops here. That is a bit of bad divergence, but I don't, usually that's not that important to me. We do have a bit of divergence here. Indeed, that's the 1 hour. That's a regular divergence on the 1 hour chart. Good spot. And if we connect these tops, maybe we're running into a resistance. Who knows? Something like this. So maybe we'll move up like this, down like this, and then up again, hit this trend line and target. And as I said, that whole area is a resistance area, and then move down again. Plus, that will be the second divergence because this is the first one compared to this. Now we'll probably have, let me put a 1 here. Then this will probably be the second divergence because you can see that most likely when we hit that 886, this is going to be lower than this most likely. So that will be the second divergence, good point, which will have a bigger, again an effect, again a reason for the currency to give that correction besides approaching the top and resistance, besides the 886. We have 1 hour divergences. Maybe as well, just to add, it could be kind of a rising wedge like this, if you like chart patterns, which makes sense in a way. If you look at the price actions, kind of starts wide and then kind of is narrowing down like this. Does everyone see that? So it could end like that. And we'll break this trend line, hook back, make it down, move again. So we don't need the trend lines to see it, but it does help maybe visually. Definitely looking so. So that all adds to the confluence that we could have at 131.50 for some rejection there. And what we could do is if either take an entry order right in here if I wanted to, but I don't know. It is a strong level. I'll think about it. But more safer probably is to wait for actually a 1 hour rejection candle, for example, with a big wick, and then take it on the open or the retrace, and put your stop loss maybe several pips or even 10 pips above, or 15. Depends how much you like that candle, or even 3. Depends what you're used to. In this case, I think a move just above that rejection should be enough. But in some cases, you do get a break of a few pips of the high, and then it moves down. So, be aware of that. So the rejection wick would then be, if we do get it, that would be more confirmation, and that would give extra confidence in that whole region why it would move down. So that's a bit more safer than just blindly taking it off that level. Or I don't think it's going to happen in our session, so that's why I'm already giving a heads up if you want to trade it, or if you're demo trading today, whatever the reason is that you would be trading. Then, for example, 5-minute world will get a push up, and you get a rejection here in the 5-minute world, and you'll get a lower high here, for example, something like this on the 5-minute. And then once you break this low, that could be an entry with a stop maybe above here. That would be kind of the signal that we're making higher lower lows, lower highs on the 5-minute world. And it's not based on this 5-minute world. The trade is not based necessarily on the 5-minute world, but it's based on the fact that we're hitting that major level, but you want to catch it at the earliest term, if you understand what I mean. All right, so those are just a few, 2 or 3, ways one could trade a rejection like that off that level. But mind you, it is maybe in a certain way risky because, of course, we're in an uptrend on the 1 hour, 4 hour chart, so we're speculating on the fact that we will see a turn at close to a top, which is always a bit risky because, you know, catching a turn is always more difficult than catching a continuation breakout trade. So, but that's only when we reach 131.50, mind you, not now. Now we're definitely in an uptrend. And who knows, maybe the rejection is very small. We only move 50 pips down and then we continue up to the next level. Also possible. All right, so, but definitely a major area. All right, let's move on. Vitatus is saying still no confirmation. No, not now indeed, absolutely. So to make everything 100% clear, definitely not now. Only when we reach the resistance levels at 131.50. All right, for sure. The next resistance level are these tops 132. All right. So let's take a look at that's the euro and pound basically. For those of you who are wondering why I'm not taking a short, just in case, I never look for counter trend trades, to be honest, and the trend is up on all time frames, 5, 15, 1 hour, 4 hour, day, maybe even the week chart, depending on how you look at it. So, you know, I'm not definitely looking out for shorts, all right? That's why. Even though I think there is a likelihood that it could reach this level and then bounce. So that's the euro pound. Let's take a look at the Aussie. Man, oh man, what a move, huh? Crazy, crazy, crazy Aussie. Pound Aussie, euro Aussie. Oh my, it moved another 200 pips yesterday. I was beating myself up because I only caught, I think, 130 of the 500 pips. I didn't expect such a massive continuation. I know that it was an uptrend already for weeks and weeks and weeks, and I traded it to the upside a lot, but I didn't expect that kind of explosion and impulse right at this position, not for 500 pips. I mean, I expected upside continuation, but wow. And the Aussie has been trending against everything. The CAD, the Swiss, the dollar, the euro, the New Zealand. It's crazy. Really, the Aussie is really massively losing ground against almost all currencies you can imagine. Quite impressive. I mean, we had that yen trend, of course, a few months ago. Still maybe still maybe a potential for continuing, but it's kind of a bit dying down, although we had some nice up moves still, right? Not saying that, but this Aussie, wow, really the last few weeks, amazing. Did anyone trade this Aussie? Doesn't matter which cross, just curious. Let's see, Hans is asking, the move was exponentiated by the yen. Will we make analysis on the pair on the dollar yen? Dollar yen you want to take a look at? Or odd yen? Okay. Yeah, we can take a look at that. Definitely, we'll take a look at that. Well, for those who didn't trade the odd, because I know that some maybe don't look at crosses like the euro odd and pound odd. That for those of you who don't trade it, just take a look for the fun of it during the weekend. And you'll notice one thing, they love trending. So if you are a breakout trader that likes the 1 hour chart and maybe likes a swing trade for a few hours up to maybe usually like 24, I would say, take a look at the euro odd and pound odd. Those things really move a lot, and they keep moving. Once you're in the trend, they really like to move, and they keep moving. It's really interesting. So take a look at that. Maybe a new world opens for you, because what I like about it is, me personally, I trade differently than Toronto. I'm more of a breakout trader that just likes to capitalize the best opportunity in the market. So I'm not necessarily focusing. I myself, I'm not necessarily focusing on euro and pound only. So I find that limiting myself, because sometimes I don't like how the euro or pound is set up. So this week I like it, but sometimes I don't like the position, and then I have a feeling that I rather trade a currency that has a better structure. So I like to watch a lot of currencies, but I know that probably most of you are, just out of curiosity, who is fully focused on euro pound, and who likes to look at other currencies? I'm kind of curious, actually. So if you like only euro pound, write like EG, and if you like others, write an O. Just curious, because I know that I have a feeling that euro pound will be more popular. That's why I'll definitely try to focus on that in this trading room. And we have nice strategies to trade it, so nothing wrong with that. So I have two others. Oh, that surprises me. 3-0 for all currencies. Interesting. Guess the euro and pound people have to speak up. 4-0. Wow. Ooh. That's interesting. Anyone else? Got 40 people in here. That's pretty big. A lot of people attending. That's good. Happy about that. But would like to see some more reactions. I know that some of you probably are busy multitasking, but I'm sure a few of you can still answer, right? The question is, are you as a trader looking at a lot of currencies, or at least several, or only focused on either the euro, dollar, and or pound dollar? So write EG if you look at euro pound, and write an O if you're focused on more than the euro pound, like the majority of your time. Let me say it this way. Okay, Adrian, I got you. Yeah. Let's see. 2, 3, 6. 6 for others. 1 says euro yen. 7 for others. Garrett says in volatility times 1 or 2. Gotcha, but otherwise several. Moot says EG. Vitata says mostly EG. Aline says USD with all majors. Okay. Interesting. Clement says euro dollar only. And Clement, in that case, would you consider yourself a scalper, or are you more like swing scalping, or more of an intraday, taking one trade a day, for example? Interesting. That's funny, really interesting for me to see what kind of traders we have in here. Okay, gotcha, Clement. So in that case, how do you see that euro at the moment? What are you looking for as a scalper? I myself am not a scalper. I do have one technique on the 1-minute chart I showed 1.5 weeks ago regarding the Bollinger Band. Otherwise, at least I always look at 5 minutes, to be honest, usually, unless I'm really timing an entry, as I showed you yesterday. But this is parabolic, sorry. Let me get rid of that, and I'll just, where is it? Ah, here. Oh, wait, I need, oh, I forgot what, I think it was 4. Now I forgot what the settings were. Forget it. Anyhow, uh, it was a Bollinger Band. It was waiting for a pause in the market, maybe something like this here. Let me quickly check that. In the meantime, let's go back to the odd. But I guess as a scalper, you would be looking maybe for oversold here, maybe. Here we're bottoming out and moving averages. Sorry, that's my phone. Forgot to put it on mute there. Let's see. Odd dollar. 2102, was it that? 2102? I'm not sure anymore. Let me just check for a quick second. Period 5. I found it already. 5 and 2. All right. That's it. Let me make it black because green is not the best color. So this would have been a long in here. Right where we hit this Bollinger Band with a good strong close. And stop loss would be half a pip below the low, so stop loss would now be here. Let's see if we get taken out. Otherwise, it would be just probably be a one pip loss, I guess, if it does. Oh, I lost price. Here's nothing. Strange. It's moving up again. Well, let's see how that goes. That's the only thing I know about really scalping, to be honest. And Toronto mentioned some things as well, right? You can see how the market died down right here. You see that? So this is the breakout. Alrighty, let's take a look now at the Aussie, as I promised. So the Aussie immense trend, and to be honest, I did expect one more bounce up here on the Aussie dollar back to the 382 fib, 98.50. I was really only interested at 98.50, or if we break this bottom. And the fact that we broke the bottom already, kind of signaling what kind of huge downtrend this is, even stronger than maybe I imagined. I mean, I was a mega bear already since a long time, especially since this turn here. And as I said yesterday, I wrote an article even saying right in here somewhere April the 18th that Aussie will be at 92 mid-June. So I still needed to drop 230 pips in 7 days, and the prediction will be spot on. So let's see. But right now we broke this bottom, and I don't see any reason for any support until 94, which is this weekly bottom, right? And after that, maybe 92.50 and then 91.50, which are targets. And the 91.50 is the 382 fib of the monthly chart. Let me show you. Right in here. See that? 91.50. 32. Back to these tops as well. Like this. And if you put a fib then on this down move, first this down move maybe, you can see that 92 area is important as well. I had 92.50. Maybe I have to 92.30 here. 92.35. Okay, so close enough. That's why that area, both areas are important, 92.50 and the 91.50. And if you would fib this one, then the target would be 89. So maybe we'll even extend to 89. Who knows? It's possible. All right. That's the week chart. And then basically we'll just be making a correction like this. And then I think we'll be back at support, and then we should see a bounce up again. But that's of later concern. This is back to reality in day charts. And you can see maybe I should fib this part here actually instead. That maybe is a bit more accurate. We see a classical correction back to this top and a very strong rejection from there. So any hook back to this bottom should make that move to the 94 area at least. A 4-hour chart, still strong, moving nicely down here. A 1-hour chart here. Did have a very bullish hour here, so maybe we'll see a bit of a retrace. And if we break a trend line like this, for example, if you put it on the correction and you get the next break somewhere around here, then you have another good trade to the downside to the 94. So that's something I'll be waiting for. We had one quite small, but still right in here after the bottom break, as you can see. And then continuation to the downside. So it depends. I think we'll see a bit of, maybe we might see a bigger consolidation area in here building up than yesterday, late New York. But any break of a trend line like that should be a great down trade. I personally took a New Zealand short actually yesterday. Right in here, I took a break, a smaller trade right in here. Upon this break, I took this trade and got 37 pips or something like here. So let's see. Any trend line like this again on the New Zealand 2 should be okay. For downside, although the Aussie looks even weaker than the New Zealand to me. But also New Zealand is a nice downside. We have many trend lines like this you can place that show good downside, just like the moving averages. Maybe we'll get a bounce right in here, who knows. It's a bit iffy, this line, because we're taking this price action out of it, so I don't know about that. But that's not good. We're breaking out of it. Maybe this trend line. In any case, let's see. This is always a major top. And here's a major bottom. So that whole, that whole region, sorry, right in here. All right. So that whole region anyhow is a major resistance because it's a bottom and a top. So that's always when it hooks back, a very big area that you want to be careful of. And it looks like we were going to get there because it's just like the Aussie. We have some 1-hour bullish price action, so I wouldn't be surprised to get there. So if we get there, maybe you can, one thing you can do is maybe monitor it on a 5-minute world, but and then see if we get a lower low like this and a break, for example. Or just like the Aussie, some correction, bigger correction, and then a break. That's about it for the Aussie. Let's take a look at the Aussie yen. Euro is still bouncing up and now down again. So you can see, I wouldn't be surprised to see this. Personally, just like the pound probably. Let's see if that happens. Okay, that's those of you who like that euro and pound. Let's move on to, let's keep an eye on this. But anyhow, really nothing to look for at the moment. Let's move to the Aussie yen. I don't have that here. Let me add it quickly. Alrighty. Aussie yen already really in a free fall almost, right? Just like the Aussie dollar, few weeks downside already. Now the Aussie yen did have a slower start, I have a feeling, than the Aussie dollar or the euro out or the pound out. But eventually, I would say like 3 weeks ago, you can see that we broke this this major wedge consolidation right in here. After an impulse, we got the continuation of the impulse downward, which, looking at the structure makes sense, right? Impulse, triangle, impulse. So that looks nice. So if you put a fib on this first down move, you can see we stopped at the minus 272, but there's so much power that we're even, going through that minus 618. So a lot of downside here. And if you put a fib maybe on this up move, we stopped at the 236 here, but even going through the 382. So maybe the next move could be the 550 and this minus 1,000. That's all the way down at 92-ish level. We're at 94, so who knows? That could be still a lot of downside potential there on the Aussie yen, getting very impulsive the last 2-3 weeks. Otherwise, from a very grand perspective, kind of funky looking, kind of like in this range with up, massive down, and a three-wave up. And you can see that we're close to hitting this minus 618. I thought we would hit this, to be honest, because you can see we had an impulse up, 50 bounce, and I was really expecting this sideways move to get a breakout to the upside and hit this targets. Missed that last target by just a very small amount considering the week chart, and it would have been nice to hit it and have the little top here, but just not enough power on that week chart. All right, back to reality. This is the day chart, so it looks like a lot of momentum to the downside. And let's see, where did we break this trend line exactly? Depends how you draw it, but you can see here that we had a smaller wedge in the bigger wedge right in here, and broke that to the downside, hook back, and continuation. You can see how many nice bear flags we have here. Those are great trading when you have bear flags like that. You can put a line under the correction and wait for the break and hook back, or you get the break immediately. So at the moment, what I would be looking for is something like this on the 4-hour chart. That would be cool, because then you have a nice trade to the 92. Something like similar to where I have those orange lines. Or I can leave them on, why not? Somewhere like this. Maybe we'll get a bit of a more aggressive pullback eventually, like this. Then these levels should be resistance. We could even put a fib probably on this down move here. Or let me put fibs on these smaller moves. Wow, that's all these targets have been taken out by this last massively impulsive. This is the most impulsive of them all probably, because look, nice down move, but this is really big. So the 618, depending on how we correct, if we correct here, I mean, well, we do have a first bullish candle first of all, but and we are, I guess, pretty low here. But if we do correct, maybe 382, 50, any of these fibs could be a bouncing area. The best is to take a look at price action and see if we react to any of these levels. If you get a nice rejection bar on the 4-hour chart, that could be the signal that we're actually bouncing off that fib. Now, if we bounce off the 382, it doesn't have to mean that we necessarily break immediately. We could do something like this, and then up to the 618 and then down. Then it would become a massive or bigger consolidation. It doesn't have to. We could actually do this as well. That's why it's always good to still keep an eye on the 382 and see if you get a rejection bar off that level. All right. Now that's if we make a bigger correction here. It could also have a very weak correction like this. Then the 382 is definitely an area you want to consider. If it's more of an aggressive move like this and down, then the likely 618 is more. It's like a zigzag, a three-wave up. So it depends on how the correction manifests itself and unfolds. Whether the 382 or 618 or 50 is more likely. If it's, as I said, if it's corrective, 382 is likely. If it's more aggressive to the upside, 618 and back to this bottom is more likely. Does that make sense? So that's if we have a correction here. Let's take a look at the 1-hour chart. And you see that any move back to the 618 would be the top of this moving average, which normally, if we do move back to that moving average, which is the 89, it's already a quite decent retracement. So that definitely another confirmation there. So let's see. I wouldn't look for shorts here personally, because I wouldn't look for longs either, because we're in a massive downtrend. I would be careful with the short just because I would like to see a bigger area like this. Let me take a look, or at least something like this. I mean, that's the bare minimum, right? 3, 4 candles, 2 candles like this. But the problem is that this is quite a bullish candle. If you look at, let's zoom in here to this recent move, okay? If you look at this down move on the 1-hour chart, maybe the only really bullish candle formation stick was this one. I mean, in this entire down move, there was nothing really bullish. This was just a retracement, 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 retracement. The only thing that smelled like a potential something is this. So, that maybe was the only one that really had, otherwise it was just tremendously bearish. And in this case, I probably would have waited for a break of this bottom instead and a hook back, right? But otherwise, this was very bullish. So even a pause like this could mean good shorts, right? If you're a 1-hour trader. I mean, if you're a 4-hour trader, then this was just one move down, and you're looking for these kind of consolidations, right? If you're a 1-hour trader, those were still okay. In this case, this is quite a bullish candle, and similar to this story, that I would rather wait for a break of this bottom before trading it, because I could expect eventually what's going to happen is that we could see, as I said, a bigger consolidation just because the 4-hour chart is ready for that. All right. Eventually, that's the rhythm of the market. After impulse, we get correction. 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 So the 4-hour chart, I wouldn't be surprised, is ready for that. And if you look then at the 1-hour chart, and I see this, then I'm getting more cautious. Now, I'm only wrong, I think, if we break this bottom, then apparently the market is just continuing, and then any of these movements would constitute good sells again when we break. And we're getting just continuous downside and more momentum and power. And you can keep doing this on the 1 hour chart until until you see something like this again, somewhere lower. And then maybe again we have that chance of building something bigger. So if this bottom doesn't get broken, then we could see something like this, and this whole 1 hour consolidation would then turn slowly but surely into a few candles, and then maybe into something bigger. That's how the whole currency starts to build this consolidation formation. All right. So that's that's what I'll be looking for. Let's see either a break of this bottom basically, or something like this. This was 2, 4, 6, 10 candles. This was 10, 2, 4, 6, 8, 10, 12, 13 candles. So 10 times 4 hours, let's say a day or 1.5 days from now, which is probably beginning next week. Any questions, Garrett, that you would like to ask? But definitely a huge downside on all Aussies, as I said. Also this Aussie yen. Personally, I didn't trade the Aussie yen, to be honest. I was looking more at the pound odd, the euro odd, the odd dollar, and not so much the Aussie yen. Although, I definitely saw the potential of this. I like the others more, to be honest. What is the support level? Well, the support's this bottom, right? Of course. And at the moment, I would say it looks like we have here 92.80. Could be. You don't want to underestimate it. 93.40. And then you want to be careful of, what was it? This target. So there's like 60 pips and then 100 pip gaps there. Those could be supports, could be. You never know. I mean, a massive trend like this could easily push through them, but I think it's still, good to be aware of them at least. Resistance levels would be any of these fibs, and especially this bottom. All right, we'll have to see how price responds to that. Let's see. Kalian has a question if we can buy euro odd. All right, let's take a look at that euro odd. I want to take a quick look at the pound and euro. I don't want to miss that. Currencies. Wow, we're already bouncing off this this very fast moving average, only 12 EMA on a 5-minute chart. Wow, that's it's very weak retracement here so far. Only a 382. Let's see if maybe we'll use this top, as a resistance to move down again. You can see that we just didn't hit the oversold here either. So, the whole setup didn't qualify yet, unfortunately. Let me take a look at the euro. The euro as well. Wait, I didn't change. Just give me a second here. I just have to change the levels here on the stochastic. 1 second. Just give me a sec. Euro also not close to be oversold. So the whole setup hasn't materialized yet, the one we were looking for yesterday as well. So let's take a look at that euro odd now. Alrighty. Let's see. The question was if we can buy the euro odd now. Personally, I wouldn't, and I would be, careful personally. I mean, let's take a look at it together. First of all, we had 3 days up like this, which what was that candlestick formation occur? This is a 3. I'm always bad in these names. Tarantula is a lot better, to be honest. This is a 3-line strike, or what was it again? Someone help me. But I would be careful because this is definitely a lot of momentum, but eventually it's going to stop. It has to stop some point. And I would be very careful. Personally, this is just like a massive move up, and it has to stop sometime. Now, the 4-hour chart, let's move on to a bit more sophisticated analysis. Besides that, is that the 4-hour chart has a doji with a pretty big wick at the top, and we broke through that low right in here. Let me make that line a bit smaller. Which doesn't spell, I would be careful with because of that doji for the moment. That could give a retrace. We could see some corrective structure in here, and then maybe upside again. All right. Let's see if we put a fib maybe on. It's difficult because it's such a grand up move. What do you fib here? Doesn't really matter what we fib. All the targets have been hit, so that doesn't really add any value. Let's take a look at the week chart. The week chart, you can see we're right at this resistance line as well. This is a huge resistance too, but that's maybe not important. The 4-hour chart, I think, is more important. Let's take a look at the 1-hour chart now, and yeah, I don't like it. What I would be looking for, and what I've traded myself, is this break here. And let's see, one of these breaks I took. Which one was it? I think this last one here. Yeah. So, these breaks are better. All right. And you see that the market has an impulse. A very weak correction. Impulse, correction. Let me do the impulses of green and the corrections of red. Those are more secure. All right. The difference between now and then is the fact that these candles were very corrective. We had a few hours of slow down move, and then we saw an impulse with the continuation. The 1-hour impulse bar. Let's zoom into that area. You see here, impulse when breaking, 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 impulse when breaking. That's a better setup. You have the impulse, you have a few hours of correction, and then again an impulse of 1 hour. So then you can expect continuation. And this was just an ongoing movement. And you can do this as long as you want, unless at some point this 1 hour move is going to stop, and we're going to get a 4-hour, just like the Aussie yen, we're going to get a 4-hour consolidation. And I'm afraid, just like the Aussie yen actually, that looking at this, that could be it. Now, I'm not saying it's not necessarily saying it has to be it, but we have bearish candles at the moment, breaking that low of the 4-hour doji. So I wouldn't start buying into that price action because it could just keep going down. Who knows? And then maybe get a bounce somewhere in here. It's going to get a bounce somewhere, but the question is where. And doesn't have to be here. It could be all the way here, right at close to this support. And then a bounce, and then maybe down again. And we'll make a bigger bull flag, something like this. And then we'll get maybe the next break. So if any buying were to occur from my side, I would be looking for something like this to happen, which means that we'll have to have some bounce here, and then like this, and then a break. And we'll have to have a nice bullish 1 hour candle that breaks out of this corrective zone, and then it should be good for another move up. But to be honest, looking at already this move up, I wouldn't be surprised to see kind of a bigger consolidation zone now. Let's see the weekly chart. Let's take a look. Plus we have the interest rate, right? Don't forget that. Weekly chart has a head and shoulders, and monthly has a Marubozu. Yes, head and shoulders, absolutely, they're valid, and that's why this thing, the euro odd, has moved up, has moved so much to the upside. You can see beautiful, beautiful, aggressive move up, hook back, up, hook back, up. Really great trading. So this euro odd, definitely, I mean, I love it. I mean, this was a great break. This was an awesome trade down here. This was an awesome trade down here. This was just a fantastic break because it went right to the 50 fib in here and right to this bottom. Nice down trades, and now we have nice up trades. Beautiful up move. Absolutely, and we broke that. Let's see if the neckline of this, depending how this wouldn't be the neckline. This is just a trend line. Neckline would be, well, I guess that would be a bit funky because it would be like this. That's strange. Or maybe this would make more sense then. No, claim it. You don't have to be sorry for interrupting. Please, feel free. Anyone, feel free to jump in anytime. But let me just finish with Kaylin's comment, okay? And I'll read yours, okay? So head and shoulders definitely valid, and that's why we had it upside, right? And the monthly has a strong Marubozu. That's also definitely valid. But I'm not sure what now that those are valid things, now it depends what you do with that information, or the monthly. Talking about, sorry. Let me move to monthly. How do you translate that to trades, and what do you do with that information? And personally, so it depends how you trade it. I traded on a 1 hour chart, and the 4 hour as a guideline, and I was constantly taking breaks like this and taking profits. So I was scaling in and out a lot, or entry and closing, entry and closing. Some people might take longs in here and still hold them. My style is more to, I'm more like grab the 50 to 150 pips and take the profit. Maybe I'm not patient enough to really let the trade go for those few hundred. I did it with the Aussie dollar though. I did grab, I think it was close to 400 pips, because I was so confident that thing was going to fall. But I don't do it normally, to be honest. So it depends how you translate the information. But it definitely is a Marubozu. It's definitely head and shoulders. It's definitely break. It definitely is a 618 bounce. And we're blasting through this 272. I expected a pause there, but still going up. So a lot of momentum here to the upside. Yeah, 142.80, I would say, looks decent. 140, 160 is his target. It definitely could reach that. The question is when and where and how. And I don't think now and the current price is the best answer. And for me, as I already said how I would trade it personally, but what time frames are you looking for to trade it, Kaden? $4 hour? And you wanted to buy it now, or what is your plan on it? You're looking for a retrace, or let me know, okay? Because to me, the answer is not now to buy it personally. I wouldn't even know the stop loss would. Oh wait, if you trade it on the 4-hour chart, you would have to have a gigantic stop loss. Oh, okay, you're looking for a trace. Well, that makes sense. I think we'll get it now, looking at the current setup and structure. All right. But as we get new price information, of course, then we will adjust the analysis accordingly. Let me take a look at the other questions now. Would you sell FID trade if it breaks the upward trend line? Adrian, can you help me here? Oh, wait, you said no. I don't get it. Upward trend line. You mean this? It's very steep indeed. Remember Tuesday that I was telling you about that euro odd and pound odd? That's the kind of breaks you're looking for. Because it's an uptrend, we have a correction, and then a move back in the direction of the bigger trend. Those are the best trades. This one is kind of exaggerated, to be honest, because it is such a massive move of 500 pips. That doesn't happen always, but that's where you do get usually. Let me show you more typical example of something like this, or this, or this, or this, or this, or this. All right, those are more usual examples. This is quite exaggerated, but so that's why on Tuesday, remember I was saying euro odd, great longs because of the trend line break. So I'm not this trend line. I would. Why I'm telling you this is that this trend line I wouldn't look for a break if I understand Adrian's question correctly. I wouldn't sell a break of this trend line, no. Not me personally. I know that some people definitely would. I know that a very good trading buddy of mine would definitely be putting this trend line on and waiting for impulse break and then looking for that hook back for downside. So I'm not saying it's not a bad trade idea and that it wouldn't work. It's just that I noticed that for me, I don't like to put the psychological effort into something like that. Well, I rather trade maybe euro dollar intraday or another swing trade on a currency that has a certain trend. Personally, I like that trading more. It's more fluent. The targets get hit faster. There's less stress, and I have a feeling that they work out a lot more statistically wise. That they reach profitability faster. That they are more profitable. So I don't know. It's not worth the stress and the effort, in my opinion. But I know plenty who do that. Definitely break. But I don't know. Not saying it's nothing wrong with it, but if you get a hook back here, you could definitely make this bigger correction, and you could see a more down move like that, and then down, and then down. The thing is, it'll be choppy most likely, I guess, most cases. So you have to have that experience to take your profit at the right spots as well. What you could do is, for example, put the fib, at least put a fib here, and take it at the 272 target at least. Don't expect more. So those shorts, definitely possible, but be aware. All right. Moving on. Let's see. Claimant's question. Could you further explain on how to read the Bollinger Bands? And if you could explain a little on how to set and read EMA as well. Sure thing. You're welcome, Kaylin. My pleasure. Glad that you all are here. Good to see you. Let's take a look. I forgot about the euro dollar. Let's take a look again. Now the euro is moving up. Pound is just oscillating there. Doesn't look like we'll have our setup today. Well, let's hope that Tuesday will be a bit better. We can see how the NFP has had an effect on everything tomorrow. We'll be very interested to see the NFP numbers and unemployment numbers and see what kind of effect we have on the currency. The dollar is kind of interesting because it had a lot of strength against the Aussie, a lot of strength against New Zealand, some strength against the pound, not much against the euro, moving strong against the CAD, but even against the pound we saw that recently. Of course, it has lost some of that strength, a lot of that strength. So the dollar is kind of a mixed basket in a way. It's weak against the Swissy, it's strong against the CAD. Oh, CAD, by the way, USD CAD. Watch out. We maybe broke this trend line here, right? But we didn't break this 103.80 area, which is the resistance. All right, so if we break that 103.80 area, that could be maybe the key that we continue with that huge uptrend. For the moment, we still respected it, and this trend line, despite the fact that we broke this trend line, we only went up to the resistance and are coming down now. So maybe we'll bounce off this trend line again. Maybe, but really only the most interested I am when we break this. That could be a massive uptrend on the Euro CAD and dollar CAD, excuse me. But the same holds true for the Euro CAD. I thought we talked about it yesterday. I'm not sure anymore. But this too, nice break, and any nice consolidation areas. Although I didn't like this consolidation area, I was looking more for something like this, but then the opposite to the downside would be good for upside. Okay, that's the Euro CAD, by the way. So anyhow, to finish the story, NFP will be interesting. So let's see what kind of direction it will give, plus the interest rates today with regard to the rest of June. So we'll take a look at that on Tuesday. We'll take a look again at our London open trade and our Euro 5-minute trade, which is based on Euro and Pound, which is based on these stochastics and moving averages. And any breakouts on the 1-hour chart and breakout pullback continuations. All right, so let's see. Hopefully we'll get some nice trades. Let's move on to claimant's question. Well, first of all, the best, to be honest, claimant, to get a really full answer is, I would say, look at the webinar of, I think it was May 22nd. Or was it May the 30th? One of these two. We went into scalping strategies. So there it's fully explained. All right? But basically what it boils down to is just a very simple Bollinger Band. You don't need these moving averages, by the way, but you could leave them on. It does give a visual, maybe a visual aid, and maybe even the stochastics. But the whole idea is just that the Bollinger Bands contract strongly, like here, and you're looking for a break to either side. Now, if you use the moving averages, you can see that the break to the downside would be counter trend T moving averages, so you could skip those. That could be a filter. Not that it's needed necessarily, but you could add it there. It could help the performance actually. Let me know how it goes. And you see that the break here was the breakout is when the Bollinger Band gets hit after a strong contraction, and you have a 1-minute candle that closes strongly, so no wick, and hits the Bollinger Band. That would be the entry. And then you're looking for 6 pips. And you're trail stopping it by half a pip. So 6 pips would be 131.22. You see we missed it here by 1 pip. That's a pity. So we would have gotten stopped out half a pip below here, which is, that's only 2.5 pips, unfortunately. And the risk would have been, I guess, something like 3.5. But the target was 6. We just missed it. This looks a bit funky. I don't know if this one qualifies, to be honest. We're looking for a strong contraction like this. This is kind of like, I don't know, maybe. That's iffy. This would have probably been a loss then. I'm missing this 1 minute candle. All of a sudden, you know, I can't tell, to be honest, because where's this candle? Strange. We did get an upside. The problem is we made a small dip here in between. Kalen, not sure about that. That's possible that it hasn't been uploaded yet. You know, I didn't check that, to be honest. Well, in that case, it will be uploaded soon, I'm sure. Just don't know when. Let me check that. I'm not, you know, not uploading it myself, so I don't know exactly when it's done, but it should be there soon. Okay. Could we show the link? I don't know where the link is, to be honest. Let me take a look at the website. I don't know where it is. I would have to. We can take a look together if you want, but maybe education here, maybe webinars. Let's take a look. Video archive. Here it is. Scalping the market. I think it's, yeah, it's there. Okay. It's not uploaded yet? Okay, it looks like it is, doesn't it? You got a play button here. That's strange. So here you can see scalping, candlestick patterns, trading breakouts, NFP strategies, money management, intraday trading the pound. You might want to take a look at that if you want. Here they are all. Here they all are. Strange that it's not uploaded then. I mean, looks like it would be so, but strange. It's only 45 minutes? That's weird. It was longer than that. That's definitely true. Yeah, so the breakout would be breakout of those Bollinger Bands, all right, after a pause. That's basically the whole idea. It's very simple, actually. Let me see if we missed any questions. So that's, no, I don't think so. Oh wait, Clayman had another question. If I could explain a little on how to read the EMAs. Well, the 89 EMA we use for London Open to indicate which direction of the breakout we're looking to trade. That's on the pound. The 34 and 55 for the retrace on the Euro 5-minute chart. But you know, pound would probably just work as well, right? You see yesterday, for example, let me show you, on the pound it worked fine. The Euro didn't give that bounce, unfortunately, right? But the Euro here, you can, the pound did, right? Moved down, back to the moving averages. We had a turn at the stochastics, and we got that trade. Okay, so that's the 34.55, and that's just to give an idea what the direction is of the trend. You see the trend is up, price is above it, this is a retrace. So that's the 34.55. I use, personally, so those are for the strategies. I use, personally, otherwise, 34, 144, that's these two, for general information on the 1 and 4 hour chart to see the trend direction. All right. Usually the 144 is an awesome indicator, I think, because it gives kind of, as I said just, it gives the balance, I think, between long-term upside or long-term downside. It's fast. It's not that fast that it changes gear immediately, but it's not too slow. So to me, it's maybe just a bias of me. I like this as a great long-term, maybe intermediate moving average. I'm just very fond of that. And you know, it kind of works neat in all time frames. Now, once again, I might be seeing stuff because I've been looking at these charts so long, but to me, look at, you know, it does give, here it pauses, but it breaks through. You know, it does give a very nice indication of resistance or support on all time frames to me. All right. And here again, the resistance. So take a look at it. And of course, no moving average is perfect, right? But to me, this is close enough to perfect, kind of, almost. So that's why I love the 144 that much. It's a fib number. And the 34 is just to gauge a bit of slower, shorter term moving average compared to the 144. All right. And on some charts I use the 12. That's just to really measure the strongest moving average, or the fastest response. Some cases, for example, on the 5 EMA, you can see the 5 minute. You can see that the price is bouncing off this 12, right? Or if you go to the 1 hour chart, I don't have a 12 EMA here. 1 hour chart. This is 12 and 34 here. No, it's 12 and 89. Sorry. You can see that price stays above the 12 EMA most of the time in a strong up move or in a strong down move. You can see when you're trending strongly here, it stays below that 12 EMA. And when we break above it, that is maybe your first indication that we get a bigger retrace back to the 34 EMA. And then we stay below the 12 EMA. And then we break above it and we make a bigger correction. Then we stay below the 12 EMA. And we break above it and make a bigger correction. All right, so that's the 12 EMA to really measure the very strong movements. Let's take a look at the Aussie dollar and add a 12 EMA to that. You can see most of the time there was no significant close above the 12 EMA, just a slight one here, right? Slight one here, unfortunately. Otherwise, really, price stayed no close above it. And here's the first close, actually, also slightly. So this already kind of confirming maybe my thoughts that we could get a bigger correction on the Aussie yen, the euro odd, and maybe the odd dollar as well. We're closing above that 12 EMA. So maybe. Let's see. Let's see. Can you show us your breakout strategy? Is from Lehman. Sure. And Rohab Bath, how do you know that the trend is over and it's about to retrace? And Clayman is asking 1 hour chart, what moving average setting do you recommend? All right. Let's see. Breakout strategies, you can use moving averages, to be honest. You can use trend lines too. So depends what you like. I use trend lines personally, and I use moving averages to gauge if we stay under them. So for example, let's see, maybe not the best example. Maybe this one. It's a smaller correction, but it's more like a 50-minute correction, right? Or maybe this, like that. All right, so let's take a look at that one. Oh. So Now, the bigger the zone, normally the better, but what I look for is at least like 3 hits, what we have here. The bigger the zone, the better, because normally they're more power. But, you know, this is still okay. This is, to be honest, more like 15, 30-minute retracements, okay? Not much of a 1 hour, but still, even on the 1 hour, you can see that it's a positive. You can see it's a corrective structure, right? So, although kind of small, but on the 50-minute world, it would be a decent sized structure, right? So you can trade it on all time frames. You can trade breakouts on all time frames, right? So the 1 hour, though, I think, yeah. Oh, no, the question was from Layman. It didn't refer to a 1 hour chart. Well, yeah, we'll use this 1 hour chart as an example. So what I would be looking for is a breakout of this trend line. For example, you can see that this 1 hour candle nicely breaking out. So if I would be trading a 50-minute world, I would trade something within this hour probably and catch the break when it's actually breaking a fractal within the 50-minute world. So a 50-minute break, you know, I'll be in the trade already and moving downside, maybe targeting this bottom or a 272. On the 1 hour chart, you get the confirmation when you have a nice, decent candlestick close outside of that trend line. And you could take it on the candle close here, put the stop loss here, or even maybe above this high, although that's a lot riskier. That's more like a 50-minute trade, right? The 50-minute world, the stop loss would be above the high, local high, which would probably be above here somewhere. But on the 1 hour chart, the high is here, right? So that would be, sorry, this would be kind of the stop loss here. And you can target the fib extension, the minus 272. And that would be the reward. All right. So if you really want to like maximize your reward to risk, you could even wait for, you can mount it to this on a smaller time frame and see if you get a turn here, a small hook back, and then a continuation. That would be the BPC, right? On the smaller time frame, you would get a hook back here and then continuation, right? And then you could reduce your risk. Depends how much time you have to monitor the charts. And then what you could use, well, in this case, the 12 EMA wouldn't be much value because the close would be here. You wouldn't keep much of a reward to risk. But you could use a 12 EMA on a 50-minute chart, for example, and it would hug price a lot tighter. You could see that this case, it has more value when we get a breakout here, as price nicely stays under it until here. You can use the high as well to trail stop it, right? So those are breakout strategies. You could use the moving average as well, by the way, for breakout. Like here, for example, you have a move back to the 12 EMA and then an impulse continuation. Or here, you're breaking out of the EMA as well, just like the trend line. Most of the time, they boil it down to the same, to be honest. But so you can use both for breakouts. Okay. Let me take a look at what's happening on the euro right now. The euro, kind of iffy candle here, doji. Now moving down again. How's our pound doing? That pound is moving up. Wow. Looks like we found support here at the 12 EMA. Very bullish. Yeah, of course, Mood. If anyone has to go, I understand. Of course, we're kind of doing some overtime here. So thank you so much for your attention. I'll just answer a few questions. In any case, see you on Tuesday, right? Hopefully. That's June the 19th. We'll catch some nice trades. It'll be a bit better day with, not that interest rate and NFP around the corner as well, which I find more pleasurable. Anyhow, we didn't have, in my opinion, okay, maybe this dip here. I don't know. I wasn't too fond of it, to be honest. All right. So hopefully to see you Tuesday. If you want to stay on, please do so, because I'll be taking a look at some questions for a few minutes, and then we'll round it up. All right. So that's the breakout strategy on the 1 hour chart. You can use the principle even on the 15. Be careful with the 15 though, that sometimes you have breakouts that turn into false breakouts on the 1 hour chart. All right. Rehoboth. How do you know what the trend is? And by the way, you can measure if it's a breakout, false breakout or not. If the 1 hour has a big wick, be careful. All right, that's the clue you're looking for. Let's see. How do you know that a trend is over and is about to retrace? Good question. You could use many things. You can use fib targets, fib retracements, key support resistances. You can use price action on multiple time frames, like we did on the Euro odd. We saw that, for example, the Euro odd 4 hour chart was moving up, bullish candles. We have a bigger doji than we had previously in this whole move up, and we broke the low of that candle. So that could be a first indication that maybe we're making a bigger consolidation. Now, it doesn't have to be so. It's just a warning. And if we move up again aggressively, like a candle like this, perfect. We can continue to the upside again, right? So just a heads up. We can use oscillators, like the Osmo oscillator, to get an indication when there's divergence. All right. There's also something called a natural rhythm or waves, or where currency does move up. All right, and you can see up, but then it stalls. Up, 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 and stalls. Eventually, this is going to stop, and we're going to get a stall on the 4 hour chart. So there's a certain natural rhythm that you have in place, and it always makes impulse corrections. And most of the time, some traders, maybe with who just start out, start to buy it right at the tops instead of waiting for that correction, and kind of take it right at the end of the impulse. Sometimes you see that phenomenon. What else can you use? Well, support and resistance, definitely very important. Tops, bottoms, channels, trend lines. That's about it, I guess. Also, the more you look at charts, the more maybe you get a feeling when a retrace could happen. But that's why I never speculate on a retrace. Actually, I don't want to trade the counter trade trend personally, because in my experience, that is so tricky to know what kind of correction you get. Do you get a massive bull flag that is choppy like this, or will you get a pretty good downside correction? It's very tricky, to be honest. Okay, that's why it's always good to look with the trend continuation trades. That's why I like breakouts so much. Let's see, next question. May I ask, what did you see or clues in yesterday's live chart trade that you were very confident to place a buy order? Sure thing. Let's take a look at that. That was the euro. We didn't take the pound, right? And what? Let me see. Yesterday was 5th of June. Alrighty. Now I was scared of this, the aggressiveness of this down move. Then again, it is a 5-minute chart, so I didn't want to place too much importance on price action on such a small time frame, because it's more a trigger chart than really an analysis chart. So the pound also made the same move. Then again, had upside ever since then. I guess the only problem with the euro was that the euro pound was moving more to the downside than I expected. If I kind of maybe speculated on euro pound upside, and if I would have thought that the euro pound was more downside, I would have taken the pound instead of the euro, and that trade would have worked out a lot better. So the euro pound kind of continued its downside, which had an impact on this upside. Now the reason for the trade itself was because we're on a 1 hour uptrend, 4 hour uptrend. We have uptrend here, higher highs, higher lows. We have, well, that's not really part of the trade. Yeah, well, this may be part of the trade. 4 hour uptrend. We have an impulse correction that took quite long, and we were somewhere in here. So I expected a break, like we are getting now, actually. All right, after this correction, impulse correction. The only thing was that it wasn't, it just wasn't ready yet at that time. We did get it here, kind of, although very slowish. And what I was looking for, because we have the moving averages also, so that's the 1 hour, 4 hour side of it. We have an uptrend. Then we have our price patterns in check, okay? Then we have the moving averages nicely lined up. The 34 and the 55 are key. Price is above it. And the moving averages are pointing to the upside. We got to move down back to the moving averages. The only thing was maybe that the break was a bit too violent through it, but all right. We're going to move towards these moving averages, which should be a retrace. And the idea is to take it on the turn of the stochastics somewhere in here, I guess. I wanted to see a hook back and then take it here to reduce kind of my risk. The only thing what happened was when we got the bounce here, what I was looking for is that we didn't, as I said yesterday, I want to see an immediate impulse to the upside, otherwise I don't trust that trade, do you remember? And I actually was thinking about moving it. I should have done it, because if it breaks this pivot here, it's not this like I want, but it could be this, and that's what happened. And you can see that it went to target. So I should have reduced my risk here, because this should have been the turning spot for that upside. We had a small continuation, and then we rounded up and went upside. All right, so similar idea would be maybe here, stuff like that. All right. I'll show you the pound dollar. Here we also had aggressive move, but we didn't break through the moving averages maybe as much. Not sure about that actually. Maybe a small difference. But here we did move aggressively to the upside. Let's see. So those were the reasons for the upside, okay? Fractal indicator, it's just basically tops and bottoms. What I look for on a 5-minute, it's a trigger, a break of the high, and I use the stop loss under the low. So it's just highs and lows for me. Opposite, of course, for down trades. Just gives easy visual aid for me when the highs and lows are finished, all right? And the last question, and I'll round it up for you all, is my settings on the candle line color is set to white. Thanks. I was already wondering. Perfect. That makes more sense. Gotcha. So let's take a look at this 1-minute chart now. Oh, it's the pound. Wait, let me go back to the euro. Where was it? Oh, I have to change it here too, of course. So we did get a small dip here. I think it was here. Before we went up, so that probably wouldn't have worked, I guess. Alrighty, thanks, Vitatus. So that rounds it up, folks. Hopefully, better luck next time. We'll get a good clue tomorrow. And anything else that I want to mention, maybe? Any heads up for trade? Not really, except that CAD. I really would want to. I'm keeping an eye on that CAD. That's the only thing that really is in my vision at the moment, to be honest. And maybe of course, the euro pound rejections maybe at a higher level, but I'll be careful anyhow today and tomorrow, to be honest. All right, and the Aussie, New Zealand maybe downside, of course. Keeping an eye on that as well. But I'll be careful today. All right. Alrighty, folks, that rounds it up. Thank you so much for being here, and hope you enjoyed. I wish you a good weekend. I wish you good trading, and hope you learned something today. And talk to you all after the weekend on Tuesday. All right. Cheers, folks. The target for the euro dollar, that's at 131.50 area, all right, for the moment at least, which is the 886 fib and the 272 target. You can see we stopped at the 786, the 618, the 50 fib, the 382. So I would say the 886 and the 272 target at 131.50 is the target at the moment. 131.48 to be precise. 131.45, 131.50. I mean, you never know. We could break through it, but looks like a good area right in here. Plus we have kind of this rising wedge that we're talking about, right, as well. Doom, 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 doom. So that seems like the rejection area where we could see maybe a huge wick on the 1 hour chart. All right. Alrighty, folks. See you all Tuesday. Cheers.
The organizer